Have to find a way to post notes for myself somewhere where I can see them while I'm speaking directly into the mic here.
Yeah, hang on a second here. All right, we're live.
Find a way to post
let me
notes
just
for myself somewhere. Oh, there's the delay. See them while I'm speaking directly into the mic here.
yeah, let me hang on a second here. All right, we're live. Let me just adjust the titles and stuff. Vince, can you still hear me?
Yes, I'm here.
All right, Thursday markets with Vince. Just the post. FOMC. No, what do you want to talk about today? Apple. They always ask us, is this made for kids? We should just say that it is. Kids need to know this stuff, right?
Yeah. Let's start off by just recapping what happened yesterday.
Hang on a second. Let me just add the tag so people can find us.
Okay.
All right, Vince, we are live. My name is Raul. I'm the coaching and education coordinator here at Trading Winds. Always a pleasure to be here with you. Today's Thursday. It's the 22nd. Vince, good morning. How are you?
Good morning. I'm doing well, thanks. How are you?
Oh, you know what? First day of fall, man. I can't fault it. I know it's your favorite season of the year.
It is.
Is it because you like market sell-offs?
Not necessarily, no. No, that's not usually why I like fall. It has to do more with the weather. I like the cooler temperatures, but mainly because of the sports scene. We get NHL, NBA coming back. We have NFL underway now. We have baseball playoffs. I mean, it's the best time of the year for sports. So that's why I love the fall.
I'll let you go ahead and share your screen. You're a bit of a hockey fan, as am I. I was convinced when I was 12, 13 years old that I was going to be a professional hockey player.
Mm-hmm.
I actually went to like these peewee and minor league type of games, and I said, I better look for a new career. Those guys were complete beasts. Here I was, like I was 6 feet at the time, but maybe 140 pounds. Like these guys are huge.
I know. And they've just gotten bigger and bigger over the years. I mean, some of these kids coming out in junior hockey are just massive, incredible athletes though.
Yeah.
And the talent, the skill level is so much better. It's incredible the strides they've made over the years.
For sure. All right. So we chose a different career of talking about the markets and trying to make a living. And we've done pretty well making a living with the markets here. What did you think of the announcement from yesterday?
It came in exactly as expected. The Fed has been saying for a while now that they are not only going to raise rates to tame inflation, but they're going to be aggressive about it. And they were once again another 75 basis point rate hike. I think it was the third one in a row. And the language in their statement was the same. They said they're going to continue to be aggressive until they're able to get inflation back down to the 2% level. We're far from that, right? So expect more of the same. Now, the markets reacted in a very bearish way, dropped significantly yesterday. Here's the daily bar yesterday on the Dow, a complete turnaround and a drop. I think we ended up lower by over 400 points. And it's the same pattern across the board, whether you're looking at the Dow, the S&P, the NASDAQ, the Russell. We're in a downtrend. There's no question about it. And this morning we wake up, Bank of England raises rates by 0.5 point. We hear that the Swiss bank raised by 0.75 percentage point. The banks in the U.S. responded by raising the 30-year mortgage rate to 6.29%. We haven't seen that in a while. Turkey, on the other hand, they cut their rate by a full percentage point. They went from 13% to 12%. But quite a different story for inflation there than here. Right here, what was our latest inflation rate? I think it was 8.1 or 8.3%, something like that.
Yeah, right around there.
Yeah, in August, the inflation rate in Turkey was 80.2.
Is that all?
You heard that correctly, 80.2. Yes. So now they've gone from 13% to 12% with their rate to try to deal with that somehow. And in other news, Japan was selling US dollars and buying yen to try to stop this rise in the US dollar versus the weakening yen. So you can see the big reaction on this pair here today. Swift pullback, and that's all because China is selling US dollars and buying yen, so to help their currency here stabilize. So, and again, what effect has that had on our markets overall here? Pretty quiet open, but still all red here. The Dow down another 80 points, S&P down 21, NASDAQ down another 110, and the Russell down 30. We've seen a boost in oil today, although well off the highs. We were up almost 3 points. We're now up 97 cents. Gold is bouncing about 10 points here. Silver, 16 cents. And like we said, the dollar still hanging in there at $1.11, looking pretty strong.
You talk about that Turkey situation with the 80%. Michael Saylor from Strategy.
Yep.
He would say Bitcoin fixes that. But then I look at the chart of MicroStrategy. I think it'd be better if he tried to fix the falling stock price on his company.
Yeah, look at MicroStrategy.
Look at the daily chart. What a orderly kind of decline here.
Right. It's just a falling knife. Let's look at the weekly. Weekly's been, in a consistent downtrend for a while as well. Actually, going back to the start of the year or slightly before then. Here's the monthly. So all those gains going back here are pretty much gone. Right. So yeah, quite the turnaround. And we've seen this story over and over again, though, this year with these charts. Any quick rise has resulted in a just as quick of a drop here. So, and it doesn't seem to be over yet. That's the main storyline.
Some news out of Canada, Vince. I heard this where parts of the government, or there are people in the government that want to review the cannabis legislation. Apparently, when it went legal in 2018, there was something in the wording that said they would have a chance to review it after 3 years. And then, of course, as you know, there was I don't know if you heard, there was a worldwide pandemic.
I heard a little bit about it. Yeah.
So that got shelved, but they're trying to bring that back now. Is this something where the toothpaste is way out of the tube here, or do you think they could repeal something like this?
I don't know. I don't know enough about that, honestly, but it wouldn't surprise me if they're able to repeal it. So many things have changed, and we've had some pretty drastic shifts here in different sectors in the market overall. Nothing would surprise me at this point, honestly.
Did you hear your boy Chamath Palihapitiya?
Yes, I did.
Saying that right?
Mm-hmm.
Threw in the towel with the last thing and left everyone holding the bag except himself.
Yeah, hasn't that been a trend? I mean, honestly.
Yeah.
hate to focus on the negative like that, but a track record is a track record, and I think there's one there. So I hate to say it. Things haven't worked out well for anyone who's who jumped on those SPACs, etc. And um,
Well,
but
we bought into a little bit of that frenzy.
yeah, early on, sure,
Yeah, I think
yeah,
I'm sure there were. I can't remember the ones that I was in now. Maybe I'm choosing to forget, but I remember you were in
hmm
Pershing Square.
yes, that's right,
Uh, Thankfully, you had that protective put on, which was very helpful.
that's right,
But
yeah,
it still hurt.
yeah, sure, it hurt a little.
Hmm.
And I mean, I knew the risk going in. Let's face it, they were brand new. The volatility around them was insane. We were just trying to make a quick buck, right? So when you do that, you have to accept the risks that go along with the potential gains, right? And so, like you said, I had protected myself with a put on those shares, and I was glad I did. So it took a small loss, but others took a much bigger loss. And you know what's unfortunate is I don't know if the creators of those took losses just the same, but I kind of highly doubt it, right? If so if they walked away with gains, then it's really unfortunate. But uh, that's how this game has played out many times over the years, hasn't it?
Oh, for sure. Looking through some of these charts, you know what I find troubling? One of the ones I find troubling right at the top,
Mm-hmm.
Alcoa. You look at the daily chart. We've now broken below that support that we had from July 14.
That's right.
Um, we're below that area of congestion from October 2021.
Mm-hmm.
Is it fair to say the next step down is that area of congestion from July of 2021?
Yeah, and here, I do think it's fair, but we're pretty much there right now. So the
Yeah.
only question is this going to hold or not, right? And so we can visually try to gauge, hey, is there enough support here? It's almost impossible to do that. I mean, we can identify that there is support. We don't know how strong, right? We can continue to bring in more data on the chart and look back to see if there was more activity at the same price level. And we can much do that much easier by bringing on up a weekly chart or a monthly chart where we can scroll back a little more. And in doing so, we can see that that little bit we looked at on the daily chart was right around here, like you said, in June, July of 21. But we look back and there was some activity at that price level here in March of 17, back here, December 14, and back here and back here and so on. So it is or should be a significant support level. The other thing we can do is look at the volume by price level. And of course, we should be fair and bring in all that data and see. And you can see that there is certainly support. There is going to be much more support at the 20 level than there will be at the 38 level here. But, compared to the volume that was up here, there is some pretty significant volume down here. So, hopefully, well, for not for those who are holding puts, but for those who might be long here. Oops, wrong button. There we go. For those who might be long Alcoa, and hopefully not many of you are because it's a bearish looking chart, but maybe, we're going to reach a point now where we start hitting support and the selling starts to slow down here. But, when you have the overall market selling off, that also puts some pressure on individual stocks. So I'm not convinced that the drop is over yet. That's for sure. We just completed this head and shoulders pattern, and we just broke that neckline, the lowest point between the two shoulders, right? And you can see how we've accelerated lower. So I think we're still in for some pain here on Alcoa. Exactly how much pain? I would say if we get below 35, we start to feel it a bit more for sure. We could end up going to 20, but either way, it's not something you should be long right now.
Another interesting one to the downside, SOXL, which is the the leveraged semiconductor ETF.
Right.
A high of 75 post-pandemic. Look at that. I'm looking on the daily chart only for now. I'll have you look at the weekly and monthly as well. Look at that July 5th low. See what that July 5th low is?
Right in here.
Yeah.
Yeah.
1053.
Exactly.
Look at the low today.
1005. So new
10,
low.
no, the low is 1052.
Today?
Yes.
Oh, yes. Oh, sorry. I'm sorry. 1052. My mistake. Yes.
So we have broken it, even though it's by a penny. We've broken it, but below here, where's our next level of support?
Great question. So if we go to the weekly chart, we can see that there is more activity here, right? So again, let's bring in that volume by price indicator and we'll see. So there is support down here. There's no question. There is more support. But here's something else you got to look at. So there's two ways to look at this. And this will be great to go back and look at in a few weeks from now. So when you get a pullback like this, what you're looking for to see if there's any sort of institutional buying coming in is a big increase in volume, like we've seen here. And what you want to, the way you want to judge the volume to decide if it's significant enough or not is to look at the average, and then what you want to see is about 3 times the average. So if we say this was the average here, can we say we've figured about 3 times, maybe not quite that high, but pretty close. So the key is when price is coming down and you get an increase in volume, what you want to see is the selling kind of slow down, because if there's an equal number of buyers coming in to match the selling, right, as much buying pressure as selling pressure, you're going to get a lot of volume there, but the stock will sort of stop going down, right? It will start going kind of sideways, right? And then if the buying pressure exceeds the selling pressure, then you get a push up, which is quite normal. Then that buyer, whoever's buying here, okay, could be a huge hedge fund, could be a mutual fund, could be several money managers buying here, okay? As it starts going up, they slow down. So they stop the buying. It settles back down here. And then, of course, more volume comes in. They start picking up more for a move higher. And that's typically what results in a double bottom. So right now, we could potentially be at a double bottom based on what we see here, the increase in volume. Okay. Now, one of the reasons why I'm not entirely convinced is that we're still seeing selling pressure, meaning, from here to here, there was really no slowdown, no real period of consolidation. We bounced. We couldn't even get above the 20-period moving average, and we've come right back down there. So this is a huge retest of this level. If it holds, and especially if it does one even higher volume, and it manages to get back above the 20 and clear this high, then we really have a reason to buy. So up in here above 22 is what you want to look at. If we fail to hold here and we dip below this level, then we're likely going much lower. And I mean, I know it's a $10 stock, so we can't really go that much lower, but we'll definitely have a much easier time dropping from here if we clear that level. So it's right there, right at that low, and we should watch this closely. A break below here, you can short it. A move back above 22, and you can consider going long.
I took a small position in LTHM on Monday on that setup. And I asked you after the fact, I said, did I do anything wrong? He said, no, nothing wrong with taking that re-entry there. That's per our victory system.
Right here, you mean? Yes.
Yeah.
Yep.
Seems to be breaking down today. Is this an exit here?
It would be if it closes like this. Yes, absolutely. Whenever you get a change in color in our victory system, you want to be out of there. You don't necessarily want to go short here. For those, anyone new here that might be listening, these are our signals from our victory system. And the only ones you want to look at, the only ones you want to take is when you have both trend and momentum on your side, which means if you have a long entry, either an original buy or a re-entry, they're both the same thing. The reason why these are labeled as re-entry is because we're already in a trade. But the same criteria that came together here to call this buy has come together once again here, telling us we can add to our position if we're already in a trade, or if we've missed the original one, we can get in now. Okay. But what you need is a sloping 20-period moving average. So this blue line is a 20-period simple moving average, okay, based on the close. And if this is sloping in the direction of the trade, then you can take that entry. If it's either sloping against you or is flat, you do not want to take that signal. It doesn't work out very often, right? So here we had real nice slope on the 20. So it was perfectly fine to enter that. Not all of them are going to work. The majority of them will, but not all of them will. And this, unfortunately, was just one that didn't work out and had a lot to do, obviously, with the Fed meeting yesterday. This bar yesterday, we were up here before the meeting. It sold off into the close and has followed through today. So it was just unfortunate timing for you on that trade.
A trade that is working that we were in is Marvell for a short. Now we got in this when I want to say September 15 on that.
Right here on this re-entry short right here.
Yeah.
So
came back, tested the 20 on yesterday, and then has broken down and now looking to test the low from September 1.
Exactly. So when we got in here short, we were looking for it to come down to this level, the 40 level, which was this prior low on July 5th. And it certainly has moved, towards that. If it takes out this low, the 40 is pretty much a given here. So far the trade is looking great. And again, the reason why most of these work is because you have a clear trend in place with a lot of momentum on your side. When you see a significant slope on that 20, that means there's a lot of pressure in that direction. So, the other thing we want to make sure of when we enter a trade, whether it's to the long side or the short side, is that we don't have a lot of overhead resistance or a lot of support below to get in front of that path that we're looking for this stock to follow, right? We want a pretty clear path, but this one seems pretty clear. If we look at the weekly chart, this target of 40 that we targeted once we got in is just target number one. We completely believe we're going to 28 here. So now we'll take our orders from the chart. We'll follow it. If it comes here and bounces and gives us an exit or changes color, we will get out. But in all likelihood, the 40 will not hold. Why? Well, that's because of the lack of support, right? There doesn't appear to be much there. But also, I should clarify, we do plan to take profits along the way, right? We don't just get in and hope we hit that ultimate target. Along the way, we do take profits and readjust the position and let it ride. So we're at 44, we're looking for 40 and eventually 28.
What are you expecting for the rest of the week as we wrap up this brief session here?
Really more of the same. I mean, it'll be interesting to see where we close today. So far, it's the type of day you would absolutely expect after a day like yesterday. So yes, we're still in the red, but not by a huge amount. It's sort of, people taking a breath, reassessing what happened yesterday, and we go from there. So do I expect these markets to continue to drop? Yes, I do. Although we are due for some sort of bounce here, right? We have moved far away from the 20. Generally, we snap back when that happens. So especially when you're hitting prior support, you may pull back again and then set up short again for the next leg lower. So today, tomorrow, I'm this is the sort of thing I'm expecting, is basically a slow grind lower. But, you know, who knows if we could get an acceleration of this into the close again. But I would look for slightly red today and tomorrow, maybe even the start of a bit of a retracement back to the 20 here before the next leg lower. But overall, going out beyond this week, I do think there's still more downside to come here in the markets.
All right, that's our brief Thursday session. If you like the content that you just heard, we'd love for you to subscribe. The subscribe button is somewhere on your screen there. And we'll send you a link, send you a notification anytime we're going live. And of course, we provide content. And Vince, all of this is free.
Yes, it is. Now, when you click, after you click that subscribe button, make sure you click the notification bell. That way you will be alerted every single time we either go live or we post a video, a recorded video. So thanks for joining us.
It's so much better than, remember when we were learning technical analysis and we had to go to the library?
Yes.
Right? The library didn't send any notifications when a new book came out or anything like that.
No, well, I mean, okay, I'll really date myself now and give you an indication of how old I am. When I started, we didn't have any charting platforms. We used to actually make our own charts on graph paper with a pencil and a ruler.
I honestly thought you were going to say you used to etch it out on tablets and things.
Yeah. No. So we've come a long way, that's for sure. But we have some great tools now.
Thanks for joining us, folks. We'll see you tomorrow.
Thanks again, everyone. Take care.